In this episode, we discuss about US inflation. It should be noted that the inflation rate is considered quite sensitive because it determines the price that must be paid by consumers in obtaining a product or service. If the price is at a high or expensive level, then the business climate will be greatly affected in increasing costs. So, what effect will this have on the world market? Welcome to the leading trading program with DCFX. Everyone can trade. Today I'm joined by Mr. Sebastian, founder from Sharp Focus, and thank you very much for joining us for today, Mr. Sebastian. So today we can discuss about US inflation and then what's happening this week.
This week on Wednesday night, the US CPI, Consumer Price Index for March will be released. It's going to come out at night time in Indonesian time, so just after the market open in the US. So it will affect the US market trading on Wednesday. And then in Asia and here in Indonesia it will affect us on Thursday.
Okay, how important is US inflation?
This is an interesting one because if you go back a few years ago, not long ago, inflation was not very important. It was not one of the more important economic indicators because it didn't change that much and inflation was very low. So every month it was very similar. Yes. So there were many other more important economic indicators, but starting in 2021, inflation has possibly become the most important economic indicator for the market. So this Wednesday night will be very important. Event. Yes.
US economic data. Okay. So what's been happening with inflation, Mr. Sebastian?
Yeah, well, the reason why inflation is now so important is because there's been a big change. So if you go back to the beginning of 2020, the inflation was low still, about 1.5% until 2%. And then by the end of that year, the inflation is starting to go up.
Yes.
A lot. And in 2021, it's going up to about 7%.
7%.
And then in 2022, by June, July 2022, it's about more than 9% inflation. And so that's the highest inflation that we've seen for many decades.
Many decades.
So it's a big change.
So what caused the inflation?
Yeah, it's a good question. Well, there's really two events. The first one is that the commodity, the raw material prices like food, like building materials, like energy. For many years, the price was low. Yeah, it was low. So it was time for the price to go up. So that's the first thing that happened. And then on top of that, because of the economic shutdown, in 2020, there's a lot of restriction on movement. So that's causing supply issue. And so the price of the commodity is going up, and then because of the restriction, it's going up a lot. So the price is like double, triple. And so that's causing the inflation. And then on top of that, because the companies, their cost is increasing. So, all sorts of companies, they're raising the price in order to offset the higher cost. And so first is the commodity price increase, then all the companies raising their prices. And so that's why you have the high inflation.
Because the inflation. So what has been the impact for the markets?
Well, it's a big impact because the inflation going up by so much. The first thing is, there's also two effects. The first effect is that the margin, the profitability of the company is affected because their cost is increasing.
Because the inflation.
So the profitability is less, so that's not good for the shares. And then the central bank was in a very difficult position because in 2020 the economy crashed. So they wanted to keep the interest rate low. But then the inflation went up And so suddenly they have to increase the interest rate by a lot.
Impact for
And so the Fed increased many times. From almost zero, the interest rate went to 5%. And higher interest rate is negative for the stock and the bond market.
So what do you expect the data to show?
Yeah, we're a very interesting time now because since July last year, so we got to about 9% the inflation in the US. Since then, the inflation is coming down. And so we've seen month to month lower inflation, but not coming down that much. So it's come down from 9% until February is about 6%.
6%.
So about 3% decline. But I think if you look at the commodity now, the commodity price, which is the beginning, the reason why the inflation happened, the commodity price is down a lot. So like minus 50%. If you look at oil, gas, food,
manufacturing energy.
Yeah, so the commodity price down 50%. So we should see that inflation is getting much lower, faster now.
Okay.
And also the companies that raise the price, mostly they already raised the price. So shouldn't be much increase anymore. And so we should see much lower inflation in the next few months. So we've seen some lower inflation, but now it should be faster, coming down faster. So this week, expecting to have hopefully much lower inflation.
So that's why you expect the debt. Do you expect that from data you explain? Okay.
That what will happen?
Yeah.
Yeah, so that should be, if we have lower inflation, then that means that the interest rate maybe can come down. So at least the Fed doesn't need to raise the rate anymore, and maybe they can actually cut the interest rate.
Maybe.
So if they cut the interest rate, then of course that would be good for the stock market, for the financial market.
Financial market.
Yeah. Okay. And there's another effect as well now, because if the inflation is lower now, then the cost for the company is also maybe not increasing anymore.
No increasing.
And so the margin of the company can increase as well. So maybe the financial results this year, the cash flow of the company could be better, because not only the commodity cost came down, but they also increased the price. So their margin maybe will be increasing. So we could see the positive surprise for the earnings.
Earnings. And will that be good for the market?
Yeah, I think so. We've seen in the last few months that the market is not doing too badly. Last 1 year still minus.
Last 1 year.
But it's in a little bit recovery, and maybe now the market can start to go up.
Okay. So this is the last from me. What do you expect the markets to do this month?
Yeah, so because we're expecting the inflation to be less, interest rates may be coming down, good results from the company,
of course.
So the market should be going up, I think. And if you look at the market in the US, we've got the Dow. The Dow is only 33 stocks.
Yes.
We've got the S&P 500, that's 500 stocks. We've got the NASDAQ, which is 3,000 stocks. So the one which is doing best recently is the Dow, which is the smallest. Maybe now the S&P 500 and the NASDAQ, which is more stocks, they can increase more than the Dow. So the market will be going up, and also more stocks will be going up than before.
This is the prediction
so
from you.
So more opportunity for the investors.
Okay. Well, thank you for Mr. Sebastian for joining us today and sharing your insights. Thank you for you all, and thanks for watching. I'm Anamil Akbar, and this is Mr. Sebastian. See you next time. Bye-bye.